Hi students, the next thing that we are discussing is related to returns. It can be a sales return or it can be a purchase return. Okay. I hope you remember the concept of the sales and the concept of the purchases. Purchases is what the company or the business or the owner is purchasing the things with the purpose to resell it. So that is called as the purchases, or it is also called as the goods. Now, when those goods or services are sold to the customer, then it is called as the sales. Sometime what happens, there is a some fault is there, okay, or it may be not according to not required by the customer, not according to the specification issue. So then what happens, there is a possibility of the return. It can be a sales return or it can be purchases return. So we start with the concept of the sales return. So sales return is what, for example, if you have a customer, you have sold some of the products, but there is some fault in the product. So what will happen? After some time, the customer will return the goods. In that case, the revenue or the sales will reduce. What may be the reason? The product is not of the good quality, so it may be due to some fault, like quality issues there, or not according to the requirement of the customer, or it may be not according to the specification, but the order was different, the goods delivered are different, so there is a possibility that the sales are returned. So what will happen? It will reduce the revenue. Reduce the revenue means what? That if, for example, customer is giving you $10,000, later on $500 or $200, $1,000 goods are returned, so it will reduce the revenue. Now, sometimes the sales are on the cash basis, sometimes on the credit basis. If it is on the cash basis, so when the customer will return the goods to you, then what will happen? He will get the money back at that time. Or if the sales are on the credit basis, then your receivables are reducing. Your asset in the form of the receivable is reducing. The second thing is related to what? That's related to the purchase. Now, again, the reason can be same. You are purchasing the goods, you are purchasing any item for the resale purpose, but the problem is what? That it is faulty product, the quality is not good, or it may be not according to your requirement, or the specification what you have given to the supplier is different, and what the goods which are delivered is different. So in that case, what will happen? You are returning the goods to the supplier. In the same way as the sales reduces the revenue, it will reduce the cost, or it will reduce the goods. Now, again, if you have paid the money immediately, like a cash purchases, what will happen when you will return the goods? You will receive the money back immediately. Or there is a possibility that your purchases are not on the cash basis. You have to pay after some time. Now it will reduce the liability. How it will reduce the liability? Because the goods, when you have purchased, your payable was increased. But now what happened? You have returned the goods. Automatically what will happen? It will reduce your liability. Now the sales return will reduce the revenue, and if it is a credit sales, it will reduce reduce the account receivable. Now again, if it is a purchases and it is a credit purchases, it will receive the account payable. So it is reducing the account payable, it is reducing the account receivable. Mean the asset will reduce, your receivables are reducing, and here your payables or your liability is reducing. So this is the concept of the return. One more thing that is very important with respect to the sales, that is concept of the discount. Now again, discount on the sales or discount on the purchases. Now the goods which you are buying, maybe the price is like $100, but you are paying less price. It may be with the negotiation, or it may be due to the time period which they are given, so you are paying early, so the discount can be given. So now you have to pay less. For example, actual amount is $100, but you are not paying $100. Let's say you are paying only $95. So the $5 is what here is a discount on the purchases. Now the same thing, for example, if you are selling the goods for $100, but the customer is paying you, let's say $98, it means there is a $2 discount you are giving to the customer. Now what we have to consider it, that the sales discount and the purchase discount, what will be the effect of these things on our accounting, or what will be the effect on the business? See, you have to receive $100, but you are receiving only $98. It means you have a loss of $2. So this discount basically is considered as discount expense. This is the expense of the business, or simply you can say it is the loss for the business. The $2 amount is the loss of the business. So this is called what? As the discount allowed. So the discount given to the customer is the discount allowed, and the discount allowed is what? That is the expense for the business. On the other hand, if you are purchasing the goods, let's say, as we said, you are purchasing the goods worth $100, but you are paying what? You are paying only $95. So the $5 which you are paying less. So this is what? This is the discount income. So this is what? This is not the loss for you. This is the revenue or the benefit for you. So if it is a benefit, it means this is what? This is the discount received. So discount received is the income for the business, and the discount what you are allowing to the customer is what? That is the expense for the business. The discount may be on the sale, discount may be on the purchases. If discount is on the sale, it means you are receiving less money. If discount is on the purchases, it means you are paying less money. So for you, as a sales discount, it is the loss for you because you are receiving less money. It is discount what you are allowing to the customer. So the discount what you are receiving or the discount received, this is what? This is the discount income for you. So in that case, we have a concept of the discount. Today we have discussed two things: the return related to the sales return, or the returns related to the purchases. Again, we have discussed about the discount. It may be on the sales or it may be on the purchases. One more thing related to the discount, it can be a cash discount, or it may be a trade discount. There are two types of the discounts are there, like a cash discount is there or the trade discount is there. Trade discount is very simple. For example, you go to the market, the price of product, let's say, is $100. You negotiate with the seller and you agree on, let's say, on the $90, $95, any amount less than 100. So it means at the time of the trading, at the time of the buying and the selling, you are negotiating with the seller, so you are getting some discount, or again, if your customer is negotiating with you and you are giving some discount, so that is called as the trade discount. So trade discount is not recorded in the accounts. We will just consider that the goods are sold at the same amount. There will be no income, there will be no expense that is considered. But the cash discount is what is recorded in the income, or it may be recorded as the expense. It will be recorded in the books of the account. So if it is a discount on the sales, so that will be the expense for the business, and if it is the discount on the purchases, that will be income for the business. So both these discounts will be considered for the cash discount. So cash discount to the customers or the cash discount from the suppliers. If it is the cash discount to the customer, so it will be the expense or the loss, or simply that is the reduction in the amount that you have to receive. But if that discount you are receiving from your supplier, that will be the income or the benefit, or simply the discount received from the supplier. So cash discount due to the early time period that you are paying, for example 40 days time period is there, but you are paying or receiving the money within first 10 or 15 days, so that discount is recorded. But the trade discount, which is due to the negotiation or at the time of the trading, buying or selling, that is not recorded in the financial statement, so that is not recorded in the accounting records. So this is the some of the basic concepts related to the returns or the discount on the sales or on the purchases. I hope that you have understood the concept, and still if there is any concept is missing or if there is any confusion, so you can